Hello traders and welcome to a new strategy video on Bitmex sentiment and on, am I doing it? Where is it? Open interest. So what we're going to be looking at today is what I've found to be really the most helpful predictor in sentiment on Bitmex, on trading futures. Now, before we go into that, I have released my price action volume guide, and we just did our first live stream and hour-and-a-half video. So if you want access to that hour-and-a-half video, if you want the private professional day trading community that I've created and access to the price action volume guide, you can click the link in the description below. All right, now let's do a second deep dive on open interest. Now, half a year ago, or maybe a little bit more, I did my first video on Bitmex order flow and on Bitmex stats on tensorcharts.com, the site you're looking at right now. I talked about just the basics of open interest, and I didn't really go much beyond that. And honestly, the information that I was conveying was just stuff I had read from articles, videos, and read in some books. It was just stuff more based off of other people's analysis than my own. And that's fine, that's just doing research and then saying what that research says. But instead, what I'm going to do for this video, and the reason I want to take another look at open interest here, is it is, from what I've found, to be the most helpful predictor of any sentiment really ever. I know that's a bold statement, but I think that doing a much deeper dive into actually just how useful this indicator is definitely worth your while and definitely worth my while to make this video. So what is open interest, and why do I care about it? Well, this is, let me try to format that right. Come on, there we go, awesome. So open interest is just going to work in futures markets and in options markets. Now, Bitmex is a futures market, so we're only going to be talking about that. But what we know is there are three scenarios that will change open interest, and this is the part that you do need to know. Now, imagine you are an entering long. So you want to go long on futures. So you enter long on one contract. Here's what you need. You need one entering short, and if that happens, pardon me, then open interest in the market is going to increase by +1. Now let's say that you are exiting long, you're up 1%, and you make a transaction with an exiting short on the order book, meaning that you put a limit order to sell and an exiting short, market buys that limit sell order, and the short exits and you exit. That would be a drop in open interest of -1. Now, let's imagine the third and the final scenario here. You are exiting your long in profit, and now there is another long who is trying to enter. So he's entering within the uptrend, you're closing within the uptrend, all is fine, and you sell your long position to him. Open interest will stay at 0. So if open interest is at 202 million and this happens, it will stay at 202 million. If this happens, it will go to 202 million and 1. This happens, it will go to 201,999,999. So you get the idea. That is how open interest works. Now let's go another deep dive into a little bit deeper in something I did not talk about before that I do think is really important, which is, why do we care about open interest and what does it actually tell us? Well, when traders are getting stopped out, taking profit, getting liquidated, or simply closing their position, we see drop in open interest, which we abbreviate as OI. And if we see a lot of traders getting liquidated, a lot of traders taking profit, and a lot of traders getting stopped out, well, then that's where we expect the price would likely reverse, because price likes to go to liquidity pools, price likes to go to a price point, and liquidate a lot of traders and stop out a lot of traders, then reverse. Now, how about when we see a rise in OI? What's going on? Well, when we see an increase in OI, that means that traders are opening both, one trader will be opening a long position, or opening long and short positions. Okay? Now, let's take a look at the data here and what we see. And what we're going to look at here, this is what's offered in the free version of tensorcharts.com/u/bitmexstats. I'm going to link in the description below. They offer 1 minute. We're going to be looking at these timeframes as well, but let's first just focus on the 1 minute and how I interpret it, and then we're going to hop on the 1 hour and go look at that information, which you can only get with a TensorCharts Pro plan. Now, what you may note, and let's just take a look at this little downtrend here. Let's examine it and talk about exactly what's going on. Okay, this is open interest right here, so I only want you to focus on this here. This is open interest, and this is price. There's no volume here. I mean, we have turnover, but you don't have to look at that. Open value, you don't have to look at that. Just this and this, okay? What we see is a decrease in price. Price decreased. Now tell me what happened to open interest here. Open interest increased. What does that mean? Well, that means that a lot of traders are not getting stopped out, not getting liquidated. We see 0 liquidations here, are not taking profit, meaning that there's really no reason for this trend to end. We see an increase in positions, an increase in longs, an increase in shorts. So that's going to further fuel the trend, lower. Now, what we see happen is after that, price just is simply able to keep going lower. Now, I expected this price move right here to decrease open interest, right? And I was really expecting price to rebound after open interest actually would drop. Open interest actually increased here. That means that shorts and longs had actually entered on this 1 minute candle. And I thought that a lot of traders might have their stop losses around right below this low, but actually they didn't. So what did the market do? Well, the market kept going down until it hit those stop losses. So what you can see here is actually a lot of traders didn't put their stop losses. Let me show you guys here. Didn't put their stop losses right here. A lot of them actually put their stop losses here. So what did the market do? Well, the market in this move, it wasn't really able to hit many stop losses, at all. What it did is it went down to here, and that price was right there when it dropped very suddenly. Now, when it dropped very suddenly, that's where we saw a massive drop, not a massive drop, but a drop in open interest here. And after we saw that drop in open interest, what happened to price? It went back up. Why? Well, the market officially stopped out the traders who put their stop losses there. The traders who wanted to take profit had already done so. And the market has no more reason to be down here. The market has no more traders to stop out, no more traders to liquidate during this preset period of time, so price does go a little bit higher. One more example, then we'll hop on that fun 1 hour time frame. You can see another example is here. Open interest is increasing. No reason for us to really expect that this trend is going to terminate. And look at this. As the price begins to inch higher, we see a decrease in open interest. And then after we see that decrease in open interest, price fell. Now, I find that open interest is the most helpful on the 1 hour time frame. And we can look at this kind of open interest in 2 ways. One is the way I was just showing before, which is reversals tend to occur when you see a massive drop in open interest. And then the second way is a little bit different. So just by looking at here at the correlation between open interest and of price, you can see, let's look at the first situation. We have open interest at about 465 million contracts on XBT USD at that point in time, just before this shenanigans down. Then we see open interest drops to 375 million. That is a loss of over 100 million contracts on XBT USD wiped off the books. What does that tell me? Well, that tells me that basically, A, many traders got liquidated, B, many traders got stopped out. Why? Well, look, there's a consolidation here. Many of them probably just put their stop losses here, and anyone who didn't put their stop losses below here definitely put them just below 3,800, and they got hunted. Shorts had probably panicked and took profit. They were happy, no reason to hold their shorts. So what this did was it flushed out a lot of the dumb money, and then it reversed. And then we see another drop in open interest, price reverses, drop in open interest here, price reverses back down. And then there's one point that I want to show because it was beautiful. Well, this one's pretty cool, but it's not like beautiful. We see a decrease in open interest, so price continues. This one's really cool. I keep zooming in and out. Look here. Typically on this kind of price move, I would expect an increase in open interest, right? Price just is going up on a 1 hour on this screen. But what we actually see is a complete divergence of open interest. Instead of traders opening positions in the direction of this trend, they're actually closing their positions. And then price went down. And as a further confirmation, as price began to go down, we see an increase in open interest as price went down, meaning that longs and shorts are joining into this trend. And the trend just kept on going. When did the trend stop? Well, the trend stopped when people stopped entering positions. They started to exit and flatline. And then we got this, that hunts many traders and stops out many shorts, very efficient price move. And we see that a massive drop in open interest does occur. Another one here, massive drop in open interest, price does go higher, as you can see. And you can just keep finding these points in the 1 hour time frame, here, and that happens. So that's the first strategy. And now the second strategy that I want to talk about is when you see a steady increase in open interest and the correlation that has to volatility. Now, on Bitmex, on this futures exchange, a lot of these traders are going to be losing money, getting stopped out, or getting liquidated. So when we see a prolonged period of no one getting stopped out, no one getting liquidated, basically just a steady increase in open interest, then we expect high volatility to ensue. So here's why. Let's look at here, consolidation pattern. And it's not atypical to see consolidation patterns to have traders to have increased in open interest. So from consolidation, we go from about 405 million to right before we get this to about 475 million. We see a steady increase in open interest until that happens. So what ended up happening here, and the actual reason why open interest is bound to drop at some point or another, is when traders continue to, and when price is in a tight range and traders continue to add to their positions, to enter longs or to enter shorts, what ends up happening is the more traders that are actually active in the market and the more contracts you have in the market, the more stop losses there are going to be. And the more liquidation points. I mean, of course, there has to be more liquidation points and more stop loss points. So as price continues in a tight range and positions go up and up, open interest, the amount of contracts on Bitmex goes up and up. I mean, there's just so many stop losses being probably put right above consolidation. Probably lots of shorts, liquidation orders right above here. So when this goes on from January 29 all the way to February 8th, we have so much liquidity above that you get that very violent price move that shocks everyone, as you can see right there. And you can see also just before this happened, the market did something a little bit dirty. You can see that price decreased and open interest decreased, meaning that it stopped out potentially some long positions. It for sure stopped out long positions or liquidated some longs. And then after it did that, then price went up. So they had to ensure that the longs didn't get wise and actually buy here and get a beautiful uptrend, but rather that they had gotten stopped out and then price went up. So this is just dumb money flowing into the hands of the smart money. Some other patterns here, it just keeps jumping around. I'm sorry. Hopefully that's not hurting your eyes. I was trying to scroll to a point of steadily increasing open interest. So we can see it really here too. That money was being, let's just focus on this consolidation pattern here until this happened. We can see that after this massive move decreased open interest, and when that occurs, we do not expect price to keep going up. If this happened and open interest increased, then I would expect price to go up. But after this occurs, we see an increase in open interest from about 380 million to what looks to be about 410 million, and then we get all those shorts to die, to get liquidated or to get stopped out right above the recent high here. And then after that happens, we see a massive decrease in open interest here, and then price, goes this way. And then that's an abnormally large loss in open interest with such a small price move. But what probably ended up happening here, and this is really dirty as well, the market went just above this recent high to stop out any traders who put their stop loss just above a high. It also went just above 3,600 to stop out any traders who had put their stop losses just above 3,600, and then it went back down. So that the smart money could distribute their shorts at very good prices. And then the dumb money could lose their money at these prices. So this is one way that I like to look at open interest, but I tend to like looking at the 5-minute. That's, I think, the better time frame to look at. And this was a beautiful pattern that you could have played using open interest. Look at this. We see price increase, and then at this point, we get a pretty sizable drop in open interest right there, right? And then the minute that price begins to go down, we do see it's minuscule, but we see a slight increase in open interest here. This would have been a good time to short, 2020 hindsight, but that would have been a good place to short and then take profit after this massive decrease in open interest. You could have just played end-to-end using open interest here, taking advantage of other traders losing money, which is typically the dominant strategy to do. Why does it keep jumping around? Typically the dominant strategy to do in the markets is to take advantage of others losing money. And now let's take a look at Ethereum. I'd say Ethereum's open interest is not as reliable because it follows XBT so often, but it still is important to look at how money is flowing with how the contracts are flowing within Ethereum. Beautiful example I see right here. It just goes right past me because the scroll is weird. Price was increasing, and price was definitely increasing on increasing open interest. I think that's obvious. We expect price to continue increasing until we get a massive drop in open interest in the direction of the trend. That happened here. Open interest decreases from 190 mil to about 187 mil, so about $3 million wiped off within 5 minutes. $3 million were wiped off of Ethereum. Were pulled out of FUSD, so price reversed. And as price began to move in this downward direction, open interest increased, making us think that price would keep going lower. So when you look at open interest decreases, I think it's very important for you to focus on only significant decreases in open interest, because you don't really want to focus on like tiny, decreases in open interest, because that's irrelevant. It's those mid-sized and really these that are much more important. And if you're asking, well, how do I know what's important? How do I know what's a large decrease in open interest? You would look at historical patterns of what typically has been a typical large decrease in open interest. And then you would use that historical for the future. And same pattern that I talked about, XBT USD, you see a decrease in open interest, so you enter, and then you see a decrease in open interest here, so you enter long, or you exit your short from here. And if we just play back to see other kinds of open interest patterns here, I think we already looked at this one, or is this the same? Or is this just another beautiful pattern? I actually can't tell. Is that the exact same as something I saw? No. Is it? Yeah, no, that's the exact same. I thought that, that was something actually different. And here as well, you can see that as price was increasing, open interest was decreasing. This kind of divergence, price is not able to go higher, as you can see. So, of course, this strategy is not going to work every time. I mean, I have to say that about every strategy because it's just obvious. I would say to combine or to pair this strategy with anything, I think that this pairs really well with order depth. With looking at, so there are more bids than offers here, so I'm going to wait until price goes down and there's a massive decrease in open interest to open a long position. Because I want to see, if I'm opening a long position, I want to see a lot of other longs closing and shorts taking profit. I want to see a lot of traders exiting at the end of a downtrend. I don't want to see traders entering positions as price is going lower. I want to see traders exiting positions en masse when the price is going lower. And one other advanced play that you can make on open interest is, and this is going to be the last strategy that I'm going to talk about, is during a trend, focus on the price moves that decrease open interest and the price moves that increase in open interest. You may see a trend, price is going up, and then you see a decrease in open interest. What that might actually be occurring is price was going up and then price went down a bit. But if you see price go down in that uptrend and that price move down was accompanied by declining open interest, that means that point probably stopped out traders, made some traders panic and take a slight profit, and you expect that the trend will likely continue. So some examples of that Oh, beautiful example here. Beautiful. Open interest, let's focus on starting on here. This is consolidation. Price was going up, right? Price was going up. And then what we see is a decrease in open interest as price was beginning to move down. So this is telling me that the longs were probably getting stopped out or exiting. And this is just providing more liquidity for price to be able to go up and increase its open interest. So then price began to continue to go up, and it looks like this happened somewhat again. As price was beginning to go down, we see a bit of a decrease in open interest. And then here, it's much more clear here. Price decreased here, and open interest decreased as well. So that's a pattern that actually I love playing in the market, where what you see is price is going up, and then when price actually does end up going down, open interest goes down as well. We expect price to continue in that direction. Flip side, if price is in a downtrend and open interest is increasing, so like something like here, then we would expect that when price actually substantially moves higher, that we would see a decrease in open interest. If we actually saw a very large increase in open interest here, then maybe price wouldn't go down. Maybe price instead would, keep going higher. But you can see, let's look at the market right now. It looks pretty clean right now. It just price is going up with increasing open interest. So I wouldn't be shocked to see price just continue to trickle higher. And yeah, so that's basically it for what we're looking at with open interest. You can look at this on all 4 time frames if you have Tensor Charts Premium or Pro or whatever it's called. And you can look at this on just the 1 minute if you just have the regular Tensor Charts. So just to recap the 3 strategies, so you guys got them. Large increase in open interest is telling me that a lot of people are entering positions in the direction of that price move. Price is more likely than not to continue moving in that direction. Strategy 2, you see high volatility on a price move up or price move down and a drop in open interest. That move is stopping out traders, liquidating traders, and the winning traders are taking profit. Price is likely to not continue moving in that direction. 3, and this one's a bit more abstract, you see a prolonged period of time where open interest is increasing, where money is flowing into positions, like it keeps jumping around again. Money is flowing into positions, so such as here, and here money was flowing from about 164 million on Ethereum up to about 195 million, which is quite the large % increase from here to here. And it really doesn't look like many traders were getting killed, or many traders were getting stopped out or liquidated or anything. So then we get this double wick, action that happened here as well. We see an increase in the open interest. When we see a steady increase in open interest, I'm expecting high volatility because you have so many more traders who can get stopped out, who can get liquidated, and that's going to fuel a lot more volatility in the market. And then the 4th and final strategy is trend specific. You see a downtrend with increasing open interest. Then when you see a retracement upward, you wonder, is that a reversal or a retracement? You look at open interest. You see a decrease in open interest as price is retracing upward, and price is likely to continue that downtrend. Let's say you see price increasing on open interest with that price move down, like we talked about, and then price goes back upward on increasing open interest, then that might actually be a reversal because then the positions on Bitmex are actually fueling that trend higher. And vice versa, an uptrend. If you see that price is moving higher on increasing open interest, and then you see a price retracement down and open interest decreases, then we expect the uptrend to continue because that move will be called a shakeout and not a reversal. All right, guys, that's going to be it. This was a lot of information in one video, and I tried to keep it under 25 minutes, and I think I did. If you have any questions, go check out one of my 2 Discords. Shoot me an email for mentoring, or you can email me a question or check out my Patreon for just a quick question if you want as well. With that, happy trading, and go look at open interest and Bitmex sentiment.